previous class, we talked about uh, characteristics of a major liquidity, so that you'll be able to understand the side of the market that you're trading, so that you'll be able to understand the side of the market that you're trading. Characteristics of what a major liquidity. So after that, we discussed about inducement, primary and secondary inducement, primary and secondary point of interest. So primary and secondary what point of what interest. So after that, I got some couple of questions within the week. So because of that couple of questions, that's why I did this strong high, strong rejection on sell side, strong rejection on buy side, weak rejection and weak rejection on sell side, and weak rejection on what buy side. So I get this so that you'll be able to understand everything about structure. Just like I said, if you're able to follow these two videos, today's video and the last video we did, there's no need to watch any other class or any other video from the mentorship. There's no need. Just only these two videos. I believe you'll be good enough. So when market give a sharp rejection, we do call that area a strong rejection. When market give what a sharp rejection, we do call that area a what? Even if this low, this low area is what inducement low. So that means, let's say you are expecting market to induce this low, but if it's a strong rejection like this, a sharp move without consolidation around this area is a strong rejection. So when market is coming to the primary point of interest, which is the SC or proportion block or QML candle, these are the major primary point of interest we do have around this point of interest. So when market is coming to this point of interest area, you can mark it out as a point of what interest. When market get to this area, you wait for what a reaction before you take a buy. You take a buy. So if market is coming to this point already, you know that this is inducement leg, but it's a strong rejection. First thing is you wait for market to either give this reversal pattern. That means a confirmation at point of interest, or you wait for market to read it. Then you take your buy. Instantly market read this low. Firstly, it will give us a little pullback into the upside. It will either continue this up move, or if we get to another point of interest that is stronger, then it will come down a little to the main point of interest, which is the SC, then continue buying. So you understand your point of interest, how we do use point of interest. You understand that perfectly. How we do use our point of interest. So that is that. So that is how we do use this word strong rejection and weak rejection. So when market is coming, if there's a strong rejection above this weak rejection here, so sometimes after market create a low, it will come back above this weak rejection, take this weak rejection, run into this strong rejection before selling. So most of the times, this strong rejection has the characteristics of major liquidity that we explained in our last class. Characteristics of major liquidity is about 4. Inducement. 1 is inducement. 2 is okay, the first one is a hunting of liquidity. The second one is a stop hunt. That means when it created something like double top before the hunting above that double top, then creating a lower low. That is the second one. Then the third one is when okay, then the fourth one is inducement. The fourth one is inducement. So that is the major characteristics of this strong high or strong rejection. So when market creates this strong rejection, most times it's always a strong high. So why market creates this choppy rejection, that means the rejection was not too clear, so it was rejecting slowly before a little down move. So market do use it to create a trap move. Market do use it to create a trap move. So that is that about strong rejection, weak rejection in a buy side and in a sell side. In a buy side and in a sell side. So this is DSY from our higher time frame. So on this area we have characteristics of what? A strong high here. Characteristics of what? A strong high. That means since this is we are still in uptrend. So, but it creates this strong high. So market broke the low of it. So this shows that we are what? Short-term downtrend. This shows that we are what? Short-term downtrend. So since market has created this short-term downtrend, so your first idea is now what? You understand your secondary and primary point of interest because there's no momentum and distance. So market would not use this secondary point of interest to continue the down move. Market would not use this secondary point of interest to continue the down move, which is this area, to continue the down move. So it uses it to create a little move here, a little corrective wave, then come to what? Primary point of interest, where we had what? The minor break of structure or restructure BMS here. So after that, market induced that first high there before selling off. So after that, now we had here as our what? BMS within this range. So within this range, we had here as our break of structure. This shows that you're what? Downtrend based on this time frame and the idea of this strong high inducement that we have learned so far. So this has shown us that because we had this area as our break of structure, because we had this area as our break of structure, the first thing is that this is our external liquidity. This is our external liquidity, which is our swing trade or position trading target. Our swing trade or position trading target. But market cannot easily take it like that. So since we have gotten here as our break of structure, so market first create a range structure around this area. A range structure around this area. A range structure. So this range structure did not induce any liquidity inside the zone or did not go in to take any internal liquidity. So that is that. So that is the area we are trading on this very time frame. So on this area, we had this area based on this range structure BMS. So we had this area as our a little range structure was created. The market created a little pullback into the upside. So after a pullback, market came to primary point of interest before this buy move. Induced liquidity in primary point of interest before the buy move. So after the buy move, it also induced point of interest in primary point of interest in this upside also run into a reclaim block around this area. Run into a reclaim block around this area before this little sell. So after this little sell, now we had a break of structure. So around this area, we always expecting a reversal. Because why? Because this is inducement high that we are expecting market to induce. This high is inducement high as secondary inducement. So now market has given us kind of a failed move here that's supposed to continue the downside to take out this external liquidity before market come forward a corrective wave to the upside. Before market come to a corrective wave to the upside. So now, based on structure range, this is our low. This is our high. This is our low. So this is the range we are trading on. From this low, from this high to this very low. To this very low. This is the range that we are trading. This is the range we are trading. So around this area, on this H4, we have all this weak rejection. So when market gives this weak rejection, we do call it weak rejection. When market consolidate before reversal, we do call it weak rejection. We see more example about that, a strong rejection and weak rejection, so that you understand it. Now, from this area, around this area, after this BMS to the upside, so market use secondary point of interest inducement here. It continue the buying. After that, it came for primary point of interest, primary before this buy got to this point and gave us a break of structure here for this short-term downtrend that happened here. So after this short-term downtrend on this DSY, we had our little break of structure here. So we had a little break of structure here where we had a major BMS to the upside that market used to show us that we are uptrend. The market used to show that we are uptrend. So after that, which is this area, market now came to what? Induce that very low around this area. Induce that very low, which is the leg of that inducement leg here. So on this DSY, it induced the low on this DSY and ran into what? Our very ran into what? Point of what? Interest around this area. After the point of interest, we have the break of structure on this time frame. We had the break of structure on this time frame. We had a break of structure and the market create a strong low around this area on DSY here. On M5, yeah, on M5 here about. So it creates a strong low. After that, a BMS to the upside on this DSY. So after the BMS to the upside, it creates our what? Our model one change of character and everything before coming to primary point of interest before a buy move. So after that, we got what? A higher high. We got what? A higher high. So after that, now this is what? Our inducement leg if market is coming for primary point of what? Interest. Based on this area range, now we have gotten a little what? A little break of structure around this area. We have gotten a little what? Break of structure around this area. And one was, there was a news on Friday. There was a news which is NFP news that happened. So that was the news. So now based on the primary BMS that we had on this DSY here, the primary break of structure that we had on this DSY. So, and you should also understand time frame what? Difference. So on this time frame, we are not yet bullish. Why? Because we have gotten a little break of structure, violation of structure around this area that is telling us that we are what? We are short-term bearish for market to what? Run into the last discount area before continuation of the buy move. For market to run into the what? Last discount area before continuation of the what? Buy move. Before the continuation of the buy move. So this was the major discount area we had, where you had our break of structure. So we expect market to come into this zone before continuation of this buy. We expect market to come to this zone before continuation of this buy. But based on what market has shown us, plus this momentum that it has what shown us here, so we are what now bullish on DSY. So if you are bullish on DSY, note this. That means we are bullish, we are bearish on most of those XXS USD. That means you are bearish on them if you are bullish on DSY. So here now is our what? Primary break of structure. So here is now our primary break of structure. So though we had a little market manipulation around this high, around this area. So that means we have a little point of interest at this area on this DSY. So that means you have a little point of interest here and another one around this area. So because of this inducement leg, so if that is first BMS, this will become what? Our inducement leg for primary point of interest for the bearish sign to continue. So that is that. This is what you're expecting on this pair. So majorly on daily time frame, on this daily time frame, we are what? Bullish. On daily time frame, we are bullish. But on that lower time frame, we are still bearish. That means we are expecting market to what? Come to what? Discount level. So if you use your Fibonacci from this very first range to this, sorry, check this, or let's use a range. Now if you use this range, you will understand that this is your 50% of that range. So market did not get up to 50%. So, but mostly before you get to this 50% is when it has what? Taken out external liquidity before it will come into what? Discount or premium. So that is why. So we are still at this area. We're expecting market now to what? Read this very area as what? Primary secondary inducement, this leg, and secondary inducement before the bearish sign will what? We continue. That is that on DXY. That is that on DXY. Okay. So on EU, here, this is our break of structure. This is what we call a weak rejection. This weak rejection, when market gives something like this, a weak rejection. When you give this, a strong rejection. When you give this, a strong rejection. When you give something like this, we call it a weak rejection. This weak rejection, this is strong rejection. When you give a sharp move, that is what we call strong rejection. So when you give something like a little consolidation at point of interest before selling, that's what we call weak rejection. That is what weak rejection and strong rejection. That is the major explanation for that. So now here we had our break of structure to the upside. Our break of structure to the upside. So here we had a weak rejection and also is an unsupported low. That is model 3. Because we talked about 2 model personally on that last class we did. So the 3 model, this is the 3rd one, unsupported low. So here we have our base candle that market can easily use. So if market did not use that base candle, that means we expect market to read this area before the buy continues. Since there's what a sharp momentum to the downside now that is showing. So that means we're expecting market now to come into what a very point of what interest, to come to what this primary point of what interest. So secondary and primary point of interest before the buy continues. So on this area, best. Now on this area, we had a little break of structure here. From our last class, we, just like I said, we expect a good hedging from here in case of what necessity. So, and that is where it gave us what a good reaction to the upside. It gave us what a good reaction. So for that, now this is where we had a BMS. This is what inducement leg. Though it can be a BMS if you're expecting market to continue to the upside to take out external liquidity, because without market taking out this low, we are not yet fully bearish. So that is that. Now after this, it gave us a good consolidation around this area, good consolidation and weak rejection. Now it gave us what a strong rejection here with the help of news also. So after that, we had a break of structure around this area, So after this break of structure, you understand that after break of structure, so we always expect, based on how we explained that model in the first boot camp we did, so we expect change of character and all those stuff. So here is our first leg of what the inducement leg. So after that, you understand how we do with that primary point of interest, reclaim block and all. So here is your reclaim block of that primary. If you're using breaker, this 1, 2 candle, the 3 of them are what breaker, and it's too big. If you're using breaker, 3 of them are breaker. If you're using breaker from a secondary point of interest around this area, 3 of them are breaker, which is quite too big. So that's why we always use the reclaim block sometimes to reduce the stop loss. So here, and if you use what is it called, fixed range within this area to note this void here, it will still give you around this area. So I was able to catch this little sell here based on this first inducement of this first high here and create a low, but there's no momentum. So it came back into the reclaim block before continuation of the sell. Before continuation of the sell. Before continuation of the sell. So after that, the same process happened here. So after BMS, it created a little range structure, then induce them as what secondary point of interest, secondary point of interest before continuation of the sell again. Before continuation of the sell here again, boom. So after this BMS, market continue creating range structure. There's no violation of structure here. So since there's no violation of structure around this area, you continue trading it till you see sign that market is ready to buy. Without that sign of buying, you don't what? You don't buy. Without sign that sign of what? Buying, you don't what? Buy. So around this area, because of this momentum and the effect of that NFP news that happened on that Friday, So what you have to do around this area is this. You wait for what? Volume confirmation, either volume divergence or those stuff, those stuffs before you look for what? A short-term buy. Because before you look for what? A short-term buy to continue the what they sell. So to continue the sell, let's look at it on N5. Okay, here we have a little point of interest. They have a little point of interest. Last area of BMS area. If market is coming for inducement, this will be what? Your inducement. So this will be your inducement. Then before market do that, a little what? Structural range was here. A little structural range was here. So a little structural range was here, lower low. So now market has created a lower low. So if by any means market create a higher high, break this structural high, that means you are short-term bullish around this area. You are short-term bullish to this area before you continue looking for sell to take out what? Because of this bearish momentum. So you follow it based on structure before you start looking for what? More sell to take out what? The last external liquidity on the downside. On the downside to take out the what? External liquidity on the downside. So the only point of interest I had around this area is this area. Market has not yet dipped into that point of interest here, just this week. So that is the only point of interest left around this area. So the news was able to violate the first point of interest, which was around this area. The news was able to violate the primary point of interest, which was within this structural range here. So secondary point of interest was violated here also because of the news. So that was on Friday. So you must be very careful within those 2 days. So that is that on EU. So on GU, the same pattern, just like what we marked, higher high, higher low. Okay. Just like what we marked, higher high, higher low, 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 higher high. So this is the range we are trading on. Based on the movement on DSY, we're expecting it now to take out this low. But we are not yet confident of this sell. Why? Because it has not what break any violation of what? It has not what given us any sign of what break of what structure. It has not given us any sign of what break of structure. So on H4, this is what we call a weak rejection. This is weak rejection. So this is weak rejection. Why this is our strong characteristics of what? Our strong liquidity. So this is our strong liquidity around this area. That is our strong high or major liquidity. So that's where market is what selling. So if there will be any area to our market we start looking for buy again is this area. Before, if market value this low, before we look for any buy, is around this area. So we are expecting market now to sell up to this very point before we look for any short-term buy to continue the what upside. But if not, we continue seeking for the what low till around this area. Till around this area. Till around this what? Now let's. Here is where we had a break of structure to the upside. We had a break of structure to the upside around this area. So till market take out this low, which is our inducement leg. So till market take out this low, which is our inducement leg. So our nearest point of interest should be around this area. Below the inducement leg, this is our nearest point of interest. If we look forward any buy move. So this is where we are expecting market to what? Come into. We're expecting market to come to this area from this due zone of what? Interest. Okay. So that is that on GU on GU. So from good, we are still bearish. So from our last weekly commentary, the point of interest that we marked, at least good as now was sold from that very area, almost to our to our target, almost to what our target, almost to what our target. So that means price has what really obeyed our analysis. So that is that. Now here is our what our next external liquidity. Here is our next external liquidity, because we are still what on downtrend on this higher time frame. A low, a high, a low. This was our first BMS around this area. Our first BMS based on this time frame. So this is our primary inducement, which market has already taken before the sell move started. This is our primary inducement before the sell move started. So here is also what our primary, our first BMS based on this time frame we had. So this is our first BMS, our minor break of structure here, our minor break of structure here. So now we expect the market now to what continue with that formation before looking for sell. So we are before looking for buy. So we are expecting market at least to come down up to this very level, to this very SC candle before any corrective wave, any good corrective wave. I don't mean that it will not happen, some corrective wave will not happen on lower time frame, but before any reasonable corrective wave will happen again, once it take out this low, this should be what our next zone. So after that, our liquidity area we expect market to induce is this area. We expect market to what induce this very area, to induce this very area. Why? Because this is where we had what a little break of structure to the upside. So point of interest, secondary and primary. So if you're picking your secondary point of interest, you know how you pick your what secondary point of what interest. So you hear there's what a little base candle here. There's a little base candle in line with what reclaim block area. Though around this area, this area is also another point of interest, but quite too big. So firstly, because of this inducement leg, market can use this first one to give a little what deep corrective wave before it continues the downside. Firstly, this one we hold price. This first zone here, we hold price based on what inducement leg. So this first zone, we hold price a little to give a little corrective wave before continuation. That's how market do move. So now, you know your next primary point of interest. We have QML candle here. We have what our QML candle here. So this is our major point of what interest we are looking at. What good. So from good on let's use M15 on good. This last week we had okay. So we had this area. Okay. So from this area where we've had the first break of structure around this area after this minor break of structure that we had here to the downside. So market now came to what induced liquidity on the upside around this area. There's little void here, little high here. So market came to induce that liquidity, primary, then sold off to primary inducement, to what primary inducement. But because of the news, would have expect market to buy from this area. But the news was push price down towards take out this low before buy. So that is why you must be very, very careful when news is coming into play. So after that, we had a good bullish move to the upside as a range structure. There's no violation of structure here. So you follow it completely. You follow the structure completely around this area till the first minor break of structure, till the first minor break of structure, which was around this area. So which was around this area. Okay. Yeah, which was around this area. So after that inducement leg, which was this high. But if you are marking point of interest, because this high here has already run into this very point of interest, you can pick that high and this little wick of this high as your point of interest. When market get to that area, you wait for confirmation first. You wait for confirmation first before the very first move. So around this area, you had structure range, lower low, lower high, lower low, lower high, then our lower low, then market create what? A higher high here. Our break of structure, ROTO, a higher high, higher low, before this recent higher high that created what? A lower low. So after that, market gave us a what? A short-term break of structure here. A short-term break of structure here. So you already know that news was in, and because of that, you should not be what? You should not fight against momentum. So here we have our minor break of structure based on structure around this area. So here we have our minor break of structure, inducement leg, inducement leg, inducement leg. So secondary point of interest was also used here before market started what? Dropping. Secondary point of interest was also used here before market started what? Dropping. So before it drop here, higher high, higher low, higher high, higher low, higher high, a lower low was created here. So with this lower low that was created here, you can easily have your what? Entry around this area. You can easily have your entry around this area to continue the what? They sell. Though there was news. So I don't expect, the reason why, that is why I did not what? Mark much, because what? That last week was up to, we had up to 2 news, and what? Strong or high impact news. So I did not trade much that last week. To be sincere with you, I did not trade much that last week. So I was working on some certain stocks again. So that is why I did not what? Trade much. So, but this is what price did. So after that, a lower low was created. A lower low was created, and market continued that formation, lower low, inducement came to secondary point of interest, the same process before the news came into play. So before the news what came into play. So that was what happened throughout that week. So this is a strong high, strong high, strong high. So you should know anytime market violates a strong high is always what? A BMS. That is our major liquidity. It's what? Always a what? A BMS, major liquidity. Characteristics of what? Major liquidity. So now here we have weak rejection. Look at it. Weak rejection. If you notice here, market took that weak rejection before selling to create a lower low. So anytime market take out weak rejection, you don't call it BMS. Unless it's what? At valid point of interest. Your primary, especially your primary or secondary point of what? Interest. So anytime market give what? Break what? A weak rejection high, you don't call it what? BMS. So from our next class, we'll be discussing more about this weak and what? Strong rejection. So that is that.